Global markets are in the red, and crypto is no exception. Welcome to the Daily Forkast, April 12th, 2022. I'm Justin Soloman of Forkast, covering all things blockchain. Most major crypto tokens fell around 10% into Tuesday morning in Asia, while Bitcoin tumbled below the $40,000 mark. We'll take a look at what's driving the market, plus a whole lot more coming up. Now let's get you up to speed from Asia to the world.
Join thousands of NFT traders who already start their day on CryptoSlam.
Now let's kick things off with the toll crypto taxes are taking in India. The country's crypto tax law only kicked in at the beginning of the month, but the crypto industry is already hurting. According to a study by crypto research firm Krabako, trading volumes at India's major cryptocurrency exchanges slumped to their lowest in years following the imposition of the taxes. Local reports citing the study said US dollar trading volume has dropped by 72% on WazirX, 59% on ZebPay, 52% on CoinDCX, and 41% on BitBeans. The study concluded that the imposition of a 30% tax on gains and a 1% levy on every trade are behind the slump. Many believe the taxes have alienated crypto day traders in the country. Now, in a tweet, WazirX founder Nishal Shetty seemed unsurprised, saying countries that do not acknowledge tech innovation will experience massive brain drain and talent will go where it is welcomed. You can find that story and more at Forkast.News. Things aren't looking too healthy in the global markets either, and following significant losses pretty much across the board, crypto leaders Bitcoin and Ethereum both dropped around 7% in 24 hours to Tuesday morning in Asia. Forkast Lachlan Keller takes a look at the market action.
Bitcoin dipped below the $40,000 mark for the first time in roughly a month and was trading at $39,400 on Tuesday morning in Asia. Ethereum also dipped below the $3,000 mark for the first time since late March. Industry watchers told Forkast a series of macroeconomic factors that are battering traditional markets are spilling over into crypto.
We've never had crypto in a seriously inflation environment before. And we certainly haven't had it where you've got inflation, a war going on, and a pandemic.
While most of the world is transitioning to living with COVID, Sullivan says China's ongoing lockdowns, particularly of 26 million people in Shanghai, are a concern for investors.
China's a huge, a buyer of everybody else's goods to the middle classes. Now, with all those people locked down and struggling to get food, they're obviously more worried about food than they are about cosmetics or iPhones or computers. We don't really know the full extent to how much these lockdowns are really killing the economy.
And with the cost of everyday goods like food and fuel rising around the world, many people may be making difficult choices.
A lot of people have bought this, bitcoins or cryptocurrencies as an investment, as a hedge, but when times become tight, they're going to have to sell that in order to be able to use that income if the rates or the returns that they're getting aren't sufficient.
Justin Soloman of Amber Group adds that a side effect of crypto markets maturing is an increased correlation with traditional markets, and as more sophisticated investors and funds allocate to Bitcoin or Ethereum, they manage that position in relation to others. However, he remains positive, saying maybe the pain brought on by macro markets could be a blessing in disguise for the long-term crypto investor. For Forkast, I'm Lachlan Keller.
Larry Fink, CEO of BlackRock, the largest asset manager in the world, went from saying he didn't see much demand in the digital asset space in July 2021 to making plans to offer crypto trading for clients 8 months later. Let's talk more about the changing approach of legacy financial institutions towards digital assets and how they are moving markets with Cynthia Wu, founding partner at Matrixport. Great to have you with us, Cynthia.
Thank you for having me, Justin.
Now, Cynthia, we're seeing a definite shift in institutional interest in crypto offerings. JP Morgan's Jamie Dimon just told shareholders that DeFi and blockchain are real, and the bank is leading this innovation, quite a change from a stance from October of last year when he said Bitcoin is worthless. What's your take?
Jamie Dimon has expressed skepticism in the value of Bitcoin several times in public. He has made positive comments on blockchain technologies and decentralized finance in general, and said there are real use cases blockchain can bring to improve the current way of contracts, data ownerships, and payments. In the crypto market, since last year, we have been seeing institutional adoptions continues and accelerates, despite of the recent market correction. The traditional financial world is looking for alpha and portfolio diversification, and crypto has established itself as a winner in these dimensions.
And speaking of Bitcoin, the OG of the crypto world is the one attracting the most institutional interest and has moved smartly from the lows of 34,000 we've seen earlier this year. And have we found a base here? What's your outlook on BTC at Matrixport?
From the macro perspective, we still believe there are a lot of uncertainties going forward. The rising rate environment in the US remain a very important test for cryptocurrencies, with 190 bips rate hike since the beginning of this year. And also in the most recent March FOMC meeting, Fed signals quantitative tightening. However, Bitcoin, we believe it's a unique asset. It offers important portfolio diversification benefits and provides a hedge against inflation and geopolitical risk. And these factors make it a distinct asset from equities and bonds. We have also seen several major public buyers in the market that worth watching. Luna Foundation Guards plans to add a total of $3 billion worth of Bitcoin to support the UST reserve, and in recent weeks already bought hundreds of millions, which has been a major buying force in Bitcoin. So my view is that Bitcoin price is very likely to stay range-bound in the rest of the year between 35K to 65K.
With some traditional institutions still hesitant to get their feet wet with digital assets, how has the DeFi world developed to, and in essence, make those institutions more comfortable with the product offerings?
Right. Accessing DeFi in a secure and controlled manner has always been a pain point for institutions. At the same time, the future is becoming more of a multi-chain world, which means the DeFi protocols are not only just on Ethereum, but also on other major layer 2s and EVM compatible chains, such as Polygon, Arbitrum, Avalanche. So this brings additional layer of complexity and risks to institutions when they access DeFi. In the past 6 months, we have been focusing relentlessly on resolving this pain point by launching a product feature called the DeFi Connector. We have seen a strong institutional interest and demand for this product, and this is a strong signal, in my opinion, for institutional adoption of DeFi.
So when we talk about institutional positions in crypto and DeFi, what are the pockets that we are seeing the most traction in?
We have seen the traction mainly coming from 3 groups of clients. The first group is private wealth client, so family offices and high net worth individuals looking for yield and diversification of their portfolios. The second basket would be hedge funds, and they are either run by experienced traditional finance veterans or spin-offs or crypto arm of established hedge fund. They are active in both centralized exchange and DeFi. And lastly, the third group of traction, I would say it's asset managers. Even though this group are regulated entities, they tend to take a more measured approach towards crypto assets. So a typical approach they take is that they will partner with crypto native firms to offer income fund or structured notes to their users.
Thank you so much for joining us today, Cynthia.
Thanks for the questions.
And finally, not content being one of the most popular NFT collections, the Bored Apes are set to make their big screen debut. The DGen Trilogy is being produced in partnership with NASDAQ-listed crypto exchange Coinbase's new entertainment arm. The first of the animated short films will debut at NFT NYC in June, as well as being available digitally through the Coinbase wallet. Bored Ape Yacht Club holders can submit their NFTs to audition to be a part of the film. However, Mutant Ape Yacht Club members cannot apply, as a separate series is planned for them. The Bored Ape Yacht Club is the third largest NFT collection of all time, with $1.7 billion worth of sales since its launch a year ago. It's not just the cinema the Bored Apes are trying to take over. Universal Music has begun purchasing the NFTs to form a virtual band, while a Bored Ape themed restaurant has just opened in California. those apes certainly keep on swinging. And that's the Daily Forkast. And now you don't need to search for us. The Daily Forkast is being delivered straight to your inbox. Sign up at Forkast.News/newsletters. Thanks for watching. I'm Forkast Justin Soloman. Until next time.